Let's bring you more live analysis now with Tom Rogers. He's head of macro consulting Asia at Oxford Economics. He joins us on the line from Singapore. Tom, we've been following this breaking news this morning. Members reaching a deal in Europe on a coronavirus recovery package. What's your initial take on the size and scope of this deal? And do you think it's going to go far enough to support some of Europe's ailing economies?
Well, the size of the deal is modestly smaller than we were expecting, but it's in the same order of magnitude. And we think it's enough to give the Eurozone a boost of around 1 percentage point of GDP in 2021. The boost to the countries that will benefit most, so the countries that are most debt distressed and have the worst labour markets. So we're thinking Spain, Italy, Portugal and Greece. The boost to those countries will be more like 2 to 4 percentage points next year. So if the program is implemented and all this money is spent, then it has the potential to have a really important impact. One thing we would say, though, is that there have been difficulties in getting these resources spent in the past. And, the procedures for getting the spending plans approved, I think, will be an interesting sticking point to watch next year. We've done some analysis which found that Italy and Spain only managed to spend about a third of the money that they were allocated over the last 5 years from inclusion funds. And so, allowing this package to meet its promise really will depend on those procedures being more streamlined and more effective in allowing the money to get out and to get governments spending it effectively.
Arnab Das is Global Market Strategist at Invesco. He joins us on the line from London. Arnab, what's your take on this deal out of Europe? Is it too little, too late, or does it represent a meaningful step forward in Europe's economic trajectory from here?
I think it's a meaningful step. I think it's quite good news. Of course, compromises have been made along the way. I think that was already expected by everyone. So I think it sends a positive signal that Europe is gradually coming together. I don't think it meets the hype, that was there of this kind of Hamiltonian moment after Alexander Hamilton in the U.S. It's well short of that. But nevertheless, I think it sends an important signal that the COVID crisis, that neither the pandemic nor the lockdowns nor the recovery from that is going to be allowed to break the union apart. So I think that is very good news. Now, of course, as I say, it's short of the full Monty of Hamiltonianism. And so it's not, the be-all and the end-all of this whole saga of whether Europe will integrate or not. But I think it is quite positive that in this crisis, the euro will survive.
What's also significant, Arnab, is that these policymakers have been able to pull this deal together ahead of the European Open today. How do you think European equities are going to react? Is this largely already being factored into the valuations for key markets across Europe, or are we going to see upside off the back of this?
I think it'll contribute to upside. I think, the story here is that this would have been quite a negative if it had, if it had fallen apart. I think nobody would have expected it to fall apart. It would have been a wait if it had to go into yet another round of negotiations and the next summit and so on. So I think it is a positive. And I think, the risk-on tone that we have here is sort of global and has to do with Europe, but also has to do with the hope for progress. There's some glimmers of progress on the medical front, on vaccinations and treatments and so forth, which all will come together to support the markets in the long run. I think, having said that, we can make no mistake. There's still a lot of challenges ahead to come back from the whole shock that the world has experienced. Nevertheless, it's an important positive.